Ira Epstein with your morning flash update for this Wednesday, the 7th of June, 2023, 8 p.m. Central Time. Interesting times. You know, if you're watching and reading Bloomberg, Reuters, CNBC, Fox, any of these type of events, you're starting to see that people are questioning how deep of a recession, where is the recession, and how do you get one that's of any meaning when you have so many new jobs continuing to be created and the service industry is so strong? That is what people are finally coming around to understanding. I have been here espousing the fact that if we get a recession, how shallow will it be? That's my question. Not how deep it's going to be. How shallow will it be? Because as long as people have money and they're getting jobs, what do? They spend their money. It's really that simple. Now, are they spending it in a massive way? No. And the reason is inflation. Inflation has not gone away. You saw this week already that the Reserve Bank of Australia changed gears and went from a pause, and they thought they were going to actually be able to drop rates. Now they raised them again out of nowhere. The Bank of Canada thinking the same thing. They've been in a pause. They might have to go up. Then we have right around the corner ourselves. We have the European Central Bank and the Bank of England. I expect everybody's going to be raising rates. I know that I'm in the minority in some classes there. People think, no, Ira, you got it wrong. The Fed's going to just sit here. Why? I don't see the inflation slipping on them. Now, if we take a look at today's data, we had the mortgage market index for the week, down 1.4%. The purchase down 1.7%. Finance down. Of course they're down. You're still feeling the impact when we just ended the debt ceiling. It just ended. So that kept that down. Now, the question is, with all the refinancing that the Treasury is doing, and we get a big set of numbers today, the 4, 8, and 17-week T-bills are being sold off. The amount's about $130 billion. That brings in money back to the coffers. We're about a week away now also from when there's another tranche of money from taxes, middle of June, going to hit into the Treasury coffers. But the question is, who's going to buy these? Okay, don't get me wrong. People want them. I don't think the big banks buy as much as you think. They could buy some because they're short in duration, but they're going to have, and I'm talking the big boys, the Wells Fargos, the JPs, Bank of America, they're going to see that their capital requirements are going to shoot up. I don't think that they have to do a lot of retrenching. I think they're prepared for it, but these are the events that I see going on and things that I think you got to be aware of. The U.S. trade balance, okay, the deficit came in, it's a little less than thought, but $10 billion more than it was in the prior report. We get the consumer credit. I want to see this because I think the consumer is getting tapped out. I saw this week's Redbook sales yesterday, and for the first time this week compared to the year ago week, down. That's important. China, take a look at how they are slow, and this is a big problem for them. Their exports down 7.5% on the year for May versus an expected 1% decline. Their imports were down another 4.5%. They thought it would be worse. They're importing a little more. I don't know what they're doing with it. And their trade surplus, a third less than they thought. Not good. The lira today plunges another 5-7%, right in that range, as the new central bank governor is now coming around and getting, if you will, more with the ideas that keep economies going. We will see how far President Erdogan allows that to happen. Each time this has happened, he just can't stand it. He fires the head of the central bank, who he just appointed, and he goes back to his idea that the way to beat inflation is to lower interest rates. Well, that's not worked real well, has it, Mr. Erdogan? I don't think so. All right. So you look at it all. Energy's a little bit higher today. Keep your eye on that gas because this market is down at a point where the first prolonged heat that hits the U.S., and I'm not a weatherman, I'm not telling you it's going to happen, it'll have an impact like that on the market. Tomorrow we're going to get the storage report. I would assume it's another build, so I don't think today you're going to run that far, but I'm certainly not wanting my clients to press the short side, and I've been telling them that. And that brings up talking about the technicals. And I want to remind you, we present things to you, the guide to technical indicators, both volumes 1 and 2, from our good friends at Futures Magazine. This was done with, if you will, when I worked with the editors there, putting together what I thought were the best type of vehicles so that you'd understand the oscillators, moving averages, market sentiment, how spreads work, option strategies. I know some of you like Gann and Dow. You don't hear much about that anymore, but it's all there, and it's right through this. And of course, options, a big, big part. Last, money management. How do we put it together? Well, each of one of these, the beauty of it is they've got the graphs to go with it. They show you what's going on. Great explanation. How do you get this? All you got to do is go to our website under free offers. You can move your, if you will, your mouse right to the top here, and you'll see an icon. Give that a click. Or the old-fashioned way. I know phones, believe it or not, they work. Give my staff a call. They'll get it out to you while you're on the phone with them. I'm Ira Epstein. I'll see you at the end of the day with the market wrap-ups. Trade well.